Disclosures for changes in accounting policies. Now, that's what this is all about, right? It's disclosures in the notes to the financial statements that make the financial statements have a quality of information that is usable by users. So changes in accounting policy, significant disclosures. Please, you only do this in the year that you make the change. You are not going to repeat this in subsequent periods. So you tell me the title of the standard that this relates to. State that it's made in accordance with the transitional provisions, if applicable. Tell me the nature of the change, the amount of the adjustment for the current and each prior period presented for each line item, not a general assets, right? You must tell me inventory or PPE. And also, if it's a listed company, you must apply earnings per share, right? So you must also tell me the effect on basic and diluted earnings per share. The amount of adjustment related to periods prior to those that are presented. Okay, so if it's back to 5 years ago, you will have to obviously restate opening balances. Okay. For standards that are issued but not yet effective, you must disclose the fact that there's a change coming, the impact of the adoption on the financial statements, and include in the disclosure the title of the standard, the nature of the impending change, NB, the date by which the application is required. That's very important. And the date on which the entity plans to initially apply. Now, this is really what I'm getting down to. At the end of the day, you're going to have to show the individual line-by-line items, the effects on individual line-by-line items. Here's an example. I said don't worry about the maths yet because this is going to relate to the individual standards for inventory or for PPE, etc. Let's just pretend that there's a decrease in the asset. Let's say it's inventory, for instance, okay? Well, it wouldn't be inventory here. Just say decrease in an asset, maybe trade receivables. Let's say in prior year 2, okay, there was a 1,000 decrease in the closing balance. Last year, there was a 1,500 decrease in the closing balance. And the current year, 1,800 decrease. Now, see what I've done here. I've done in the statement of financial position, I've split up from the statement of financial performance. In the statement of financial position, for a change in accounting policy, I must do current year, last year, and a second prior year. So in effect, I'll end up with 3 columns in my statements of financial position, please. NB, 3 columns. Okay, and I must do that for the face of the statement of financial position too. I must also show the tax effect here, right? So let's pretend it also decreased the deferred tax liability. That will have a net increase in the overall net asset position. So the decrease in liability of 300, 450, and 540. The overall decrease in equity is then shown 700, 1050, 1260. Okay, that's all based on the closing balances. I must also show the opening effect on retained earnings. So in prior year 2, the opening balance effect on retained earnings was a decrease of 140. So let's pretend there was a decrease of assets and a decrease in the tax liability of 60. Okay. Now I'm getting down to the statement of financial performance. Let's pretend it only affected profit or loss for a second. Here I've just said it decreased revenue, right? I'm not applying specific details here, guys. Big picture only. So let's say a decrease in revenue. Take note here. I do not have to do prior year 2. I only have to do current year and 1 prior year, because obviously it's the movement between each of these that gives me the next year's profit or loss movement. Okay, so what I've done here is obviously the movement between the 1,500 and the 1 gives me a decrease in revenue of 500. The tax effect is the movement between the 1050 and the 700, being a decrease in tax, increase in profits. Overall, I had a decrease in net profit of 350 in last year's books. This year, decreased 300, being the difference between the 1.8 and the 1.5. Don't worry about the maths and the journals and the debits and credits yet. Later on, we'll do some journals and workings with you. The tax effect, the 540 and the 450, increases profit, decreases tax. Overall, a net decrease in profit of 210. What I need you to realize, statements of financial position, current year, 1 prior year, 2 prior years. 4, financial performance, profit and loss, other comprehensive income, current year, prior year. Not applicable for the second prior year. Okay, gives you a nice introduction, guys. Take note, when you do errors, there's going to be a slight difference in the disclosure requirements for prior period errors, because we don't have to do the current year there. Okay, thank you.